Welcome everyone. I'm going to do a quick overview of Fibs. Summary of Fibs, Fibonacci Retracement for Trading. Presented by 3Stacks. I've done a deep dive video on the macro level Fibs in the past. You can check that out. You can find that in the education section in the Discord. This is going to be a quicker summary and focus more on recent ranges instead of macro ranges. Let's dive in. So Fibonacci in trading, a quick review. So traders apply retracement levels by identifying the swing high or the swing low. And this helps identify reversal points, exits and entries, stop loss levels, and institutional buy and sell levels. For me, I like to look at the daily and or the weekly time frames to identify a swing low to a swing high or vice versa. If it's a recent trend, I will sometimes use the 4-hour chart to get all hours and that data. Look at the chart on the right. The standard Fib set comes with these colors to make it easier to identify these levels. I take these off and kind of modify it to my own liking, which you can do as well. On the charts, you will notice, on my charts specifically, I add the 114, 707, and the 886 Fib. This gives you more levels within the range that most traders miss or don't use these levels. I also use Fib expansions and extensions to identify Fib levels above or below ranges, and these help me get my targets for more longer term swings. So this is pretty self-explanatory here. In this first picture, you'll see a swing low to a swing high. So what you would do is take a pivot from the bottom to the top of that range, and you would get a Fib sequence. On the right, you'll see the downtrend range, and what you do is you take the Fib from the top to the bottom, so a swing high to low, and you would get that range. So common mistakes and some tips. Not identifying the correct swing points, voids, and when to remove the Fibs. Another mistake, ignoring other market factors, data, earnings reports, news, now with Trump being president, headlines, tariffs, tweets. Some tips that I like to remember are higher time frames are key. Like I said, daily, weekly helps you get more clear ranges. But if you're trading more short term, then you could focus on like the daily 4-hour charts and get ranges from those. So charting some Fibonacci levels. Now let's switch it over to TradingView and do some examples here. So here's SPY monthly. Let me remove these drawings and let's take a look. So if we want to get a recent range, I'd like to start, let's look at the weekly here. And so for me, it would be pretty clear that you could take a range from August lows all the way, I would say, to December highs. And the reason for that, let me explain. Let me set these Fibs up for a sec. So with this is pretty much the second half of the year of last year. So this would give us a full range from August low to December high. The reason why I wouldn't put it over here on January's high, because it's too recent and we haven't broken out of this range yet. So what you could do is, you see how we've retraced back to the 232. But for me, that's not really good enough to use this range. You can see that this lines up with the 80 EMA here, so you get some confluence here. And you can see that the 21 EMA is now aligned with the 236 fib right here. So that's what you'll start to notice is, I like to think of it as casting a net to catch the algorithm, the market maker levels, institution levels, and that's pretty much what it is. But what you could do is actually take this range even lower, since we haven't really retraced back down into any of these levels. So for more of a short-term view, this is how I would do it on SPY. You take the November low, because we had a dip here. So this November low to December high. And now let's see what that looks like on the daily time frame. This would be a tradable range for me. So you get the daily, and it starts to make a little bit more sense why I took this range. Because you see this drawdown here, that created a pivot low all the way to a new high in December. And ever since that, we saw a pretty significant pullback. So what I like to see is the range is still intact, but then we respected these levels. So on SPY specifically, you can see we came back to the 618 for a recovery bounce. But what happens? December 26th, the end of the month, we reject this 114 fib. This is a fib that I add in. That's another institutional level. So that's a good point for like a target. If you were here, 618 is the golden pocket all the way down to the 786. So the 618, 707, 786. This is where I would be looking in this whole range for a bounce. And sure enough, we tested the 618 all the way back up to the 114. But I like to always keep in mind that the 707 is usually going to be tested at some point, most of the time. And that's where you're going to see institutional buys. So sure enough, we reject the 114 fib. We come back down here to the 618 for a second test. And then look what happens. We didn't have enough juice to go back to the 114 here. We stalled out at the 236. And then we saw a lower low here. That's why I like this range, and this is definitely a tradable range. After we stalled out, you go down to the 707. We undercut the 707, which is also sitting right here at the 100 SMA. So you see all these confluences. You just have to start stacking them. You get a bounce off that SMA, but what do? We undercut the 707 fib. This would tell me most likely this is where institutions are going to be loading. And sure enough, from that 707 retest, to me, that's a deep enough retracement into the 707 for a bigger bounce. And we did. So we went all the way up and made new highs into January. So the end of the month, January, we created these new highs. So all of these are going to still be tradable levels. So why I didn't change the fib sequence from here, you could probably then take a fib from this January low to the January high, and you would get a whole range for January. But for me, I don't like to complicate it, so we're still trading within this range, and we're still respecting these levels. So we stalled out at the 114 here, finally got the deep retracement to the 707. That's the level I'm always looking for institutions. That's where they like to load it, because most people don't have this level on their chart. You got to remember, they only have the 618 and the 786 but that whole area is the golden pocket. At least that's how I refer to it as. We get up here, we make this new high, but we didn't get enough closes outside of this range to continue up. So sure enough, we come back down to the 236. But look what happened. The last time it was resistance here, Now you have a case for it to building support. So this time we held the 236, shot up, made all-time highs, got this crazy gap down. But even though it undercut the 236 this time, it's still fighting this level as previous resistance turned to support here. And we shoot back up the 114, also previous resistance, building support here because you have this daily candle, another bounce off the 236, but you get a close over the 114 right here. Next day, these are magnets, so you're still over this area. So you're building these 4 days, and then what happened this past Friday? We shot up, stalled at this previous high range, but where did we catch? Right at the 114. And as I keep saying, that was previous resistance, especially here when we saw that deep sell-off in December. So resistance, resistance. Here it's starting to form support. And sure enough, that's kind of where we caught. We closed under it on Friday, also with confluence of the 80 MA right here. So to me, I need to see some more days around this level. And the way I think of these fibs is not necessarily hard levels, as in let's place a stop right here. These are magnets, you have to remember. So that's how they're treated. It might undercut a fib, but chances are it could consolidate and chop around these areas, and that's what you notice. That's why I've kept these fib sequences on. And so I won't touch this sequence until we get a full measured move. What do I mean by that? What I mean is I will add the negative 236, negative 618, and the negative 786. These are all my fibs that I use. So you can go ahead and screenshot that and make sure that you have these turned on your fibs. So when you pull this down, you'll start to see. So now that we're building in this range, you can kind of see this little trend that we're making here. But you only have 2 touches so far. So I could see more consolidation, and we could squeeze tight probably these next few days. And this minus 236 fib would be my full measured move target. So that's why I'm still remaining bullish, because we've been building too much and holding these key levels that I think we will go and test 616 in that area. Until you see these fib levels touched above, that's when I would be more cautious. But we haven't done that yet. We're just pretty much consolidating this whole move, which is the election move from November to December. Healthy retest of all these levels, and that's why I haven't placed any other fibs sequence. And you can go down to the 4 hour and it's still the same. But you will see where I took the open. So these candles, the range was the daily, so it's going to show where it's not going to show pre-market, after-market. But you can still see we're trading, nothing undercutted on top or bottom. And so we've seen this huge retracement since Friday. And you can see we, like on the 4 hour, we already lost my 50 SMA. So to me, that could be an undercut of the 50 SMA on this 4 hour, or we might have to head back down here to the 236 fib, which is 597, which is like less than $2 away. I would expect some sort of bounce here because you can see this level's held strong. It undercut it. 1 day later, we're trading above it. That's why it's so hard to really short this market unless you're already positioned for it. Day trading, scalping, that's pretty much how it would have to be. So that's pretty much how I would do fibs, as in for a SPY example. I hope that makes sense. Let's take another look at another one. Let's do Amazon. So this is Amazon's 4-hour chart. So we want to get an accurate range. So you could take this fib sequence from here to here, but there hasn't been a huge retracement down. So what I would probably do is take it from here. Let's see. And then I'll turn these off for now. Let's pull up the daily to confirm this range. And it's easier to do it on the daily. So you'd see all these pre-market hours. We had levels down here, but what we'll actually do is just take it down here. Reason why I didn't put it at this candle is because there's no closes below. So these are just wicks. You can play around to your preference, but it's pretty much going to be similar levels. So we took this recent high on December 16th down to a low on January 10th. That low held. So you could put it here, but I like to put it there because that 4-hour chart had more confluence on this level. You'll see what I mean. Let's turn back. This time would be extensions, which would be a 1.414, 1.618, and the 1.272. Now let's turn it to the 4-hour chart. So this is going to give you a way more recent range. That's why once you start to play with it, you can start to understand. And you'll see what I meant by, on the 4-hour chart, see that level here? It lines perfectly down here with this low. No bodies below that level, just wicks. So I like to keep it there because we have confluence. 1, 2, 3, 4, 5 4-hour candles bounced off of this low. That's why I like to put the 0 fib right there. So a pivot here to a swing low. Now let's look at what these fib extensions above do for us. That gives us the full measured move pretty much. So as soon as you see a fib break, a chart break out of this fib sequence, like right here, from 233, that was recent highs. We turned those recent highs into support. So that gave me clear indication that we're going to at least go test 237. And if we're strong enough, this 240 area, that's where you probably hear a lot of people get that 240 on Amazon, because it's a measured move. That's what these give you above. And that's why I'm keeping this range, because this is kind of a unique one. We retraced the full range down, but it never broke. So you could see to here. But even down here, we were in the golden pocket and we still get a bounce up, but we could never break this 707 fib. So at the 707, they kept selling it back down, selling it back down. But sure enough, this time here, we started building a little base on the 4-hour, all the way up to this huge move up. But it wasn't good enough because we had a huge gap down off that news recently at the end of the month. But the whole range held. We bounced off of the 200 SMA, so more confluence on these fibs down here. And that pretty much shows you that this chart's just been consolidating this giant move up here, and that's what you want to see. So it was like pretty much a flag all the way here. We bounce all the way up. That's where I got my full measured move for Amazon. I still think Amazon can test the 243 area, and that's the 1618 move fib. So that would be a complete move, meaning it reached the highest level of these extensions. That's where I would be cautious on Amazon for a bigger pullback. And so you can see On Friday, we broke below this range, meaning I would not be surprised if we have to come back down to 233. That has proven to hold recently. So this is how I use fibs. Instead of you don't really want to get in the habit of continually to redraw off of every recent pivot. You have to identify a range that's been pretty much confirmed and has confluence. So this whole area was consolidation, and really it's just a bull flag. So you can see that move. We just started flagging, chopping in here, finally broke out, and then back down. But look at this. If you put that trend line, they say trend lines don't work. It's just more added confluence because we reclaimed the 50 fib. Even though there's a huge wick down, the body is closed over this 50 fib. The next day, the 50 fib holds, and then we just shoot back up. So it's all in pretty much your trading style, and that's how you can use these for targets. So say you got in down here, it'd probably be smart to be trimming in this golden pocket area because you don't know if this breakout's going to continue. So you could just have like a trailing stop on a swing, but nothing here tells you to sell really, because these are good like candles that just keep moving up. Once you break out of this range, just think of like a swing low from 216 to 235. You should be taking plenty of profit because you know that there's going to be a pullback coming. And sure enough, there was a huge one. But that's another entry because all it is just a higher low from these two lows, higher low. Retest of this breakout trend line, and it held, which means that would be a great entry here to move higher. And then the more you do this, the more you just start to get used to it. So that's how I would do a 4-hour fib on a recent Amazon chart. Let's take a look at Google. Same kind of thing as Amazon, really. So what you could do here is, let's see, you have this giant gap up. You can take a fib here to here, but you'll notice that it just keeps drifting higher. Let's see what this looks like. So I like this sequence. So from a gap up to this recent high and a full retrace down to the 786. That's what you want to see. Like, these are the type of swings you want to be in because it broke out, held the golden pocket, went higher, still stalled out at the 236, but then we held higher. So here's a low, higher low, another higher low, pretty much same level of the 618. So you're holding the golden pocket. Each time you do that, the more bullish it gets. Can't break this range. The previous high, we wick back down to the 50. This time we peaked out of it, but it wicked hard down. So anytime you're at highs, you're going to see a lot of selling pressure at these areas. But this time it went to the 0.5 fib after this little mini sell-off. So it's like each time it's just like a ping pong ball retracing and getting tighter. So that would have been a great entry off the 50 fib for higher. But now what do we do up here? We don't have targets. That's where I have to go add my targets. And that gives me the minus 236, minus 618, minus 786. This is where I'm getting my earnings targets for Google. So that's a bullish candle for all the news we had on Friday. Google was one of the most strong names. So huge relative strength because now we've closed outside of this high range and it's holding above. So what I would like to see is a test of the 206 area, and we probably could see some selling. So that's where this all comes into how you trade. Like if you have enough time on contracts, does this 201 to 191 hurt? Maybe a little bit, but if you have enough time on your contracts and you continue up, I don't know. Like it's probably better to capture the full move because we haven't even broken out of this range yet. That's where I get this 214 level. That would be a 618. That's a full measured move. That's where I'm expecting Google to go if they beat. And you could see some heavy selling up in here in this range for ultimately coming back down to retest some of these levels. And that's how Fibs work. It's like you're just catching where are they buying and selling. And so let's bring it to the 4 hour. And I'm not going to lie, this kind of looks like a base forming, but it could also be like an exaggerated bear flag. But the more it starts to do this, the longer it does it, it kind of invalidates that way of thinking for me because it's like building a huge base. The longer the base, the higher the space. So that first breakout, wouldn't be surprised if we have to come back to retest 201, which is that previous high. Also, the 8 EMA on the 4 hour aligns here. So you'll start to see a lot of moving averages start to align with your fibs once you learn how to place them right. So that's pretty much where I get these targets for Google. And then I would be looking at 206, 214. And if we start to lose this range in this gap area, then you might want to, that's when you would probably want to like figure out, should I probably just close these contracts, stop out? This is all coming down to preference, and that's why I'm only swinging on charts that have really good relative strength, because the chances are they're going to go higher are pretty high. So I hope that's keeps it kind of simple there for Google at least. And like I said, with my macro fibs, it's kind of a different strategy because I'm getting ranges that are like months long to years long. So that kind of has I have a different way of doing that. For instance, let me show you snow. So if you go to snow weekly, let me do an example. It's still a fairly new IPO, so it pretty much launched in COVID. Let me remove these 5 drawings. So what I would do is take the high to this swing low here. And the reason is because we've already held this swing low again, so I wouldn't put the fib over here. Like you want to see more retests. It's like a trend line almost. So you have pretty much 1, 2, 3, 4, 5, 6, 7, 8, all these tests, and it's held. So let me take these extensions off. And that's why I'm super bullish, because the chart for snow looks like it wants to go higher. The longer a stock base is, the bigger the move up will be. And so this week, you actually see we keep stalling out at this 236. I actually think once it breaks this 236, we're going to 232, which is the previous high that it stalled out at. And if you know I like harmonics, you can just see it like this. So like into 2026, if cloud is going to be really like the next wave of AI, which it seems like you're going to need more cloud computing, I think snow is a sleeper because everyone's already forgot about it off all this weakness, the new CEO. But that's what you want to see off this previous earnings. Look at this giant candle. That gave it enough juice. So earnings coming up again, I need to see it get over this fib. And this B point is perfectly aligned with this 382. So if you can catch a C to D leg on a longer swing, there's no reason, like, it's just, it makes it easier if you have time on contracts. Harmonics is a whole different story, but that's just kind of to prove a point and to show you. Look at this, the high to the low, you swing down. You didn't know it here, but looking back, that's the 886. It's stalled there. You could even see here around the 382 a relief bounce down. That's how it is always trading and respecting these levels. So I thought snow was a really good example because it displays this on a weekly time frame. That's more of a macro fibs on how I would do that. For shorter term, you could probably even take this high to low, and I'm sure you'll see that this is probably trading around like the 50 fib, if not above. Now let's take a look at coin. Coin is like a cup and handle pretty much. Another recent IPO from 2021, and it's already getting back to highs. That's pretty incredible. That's why I'm so bullish on coin and continue to be. So after this huge move, you have this bull flag pretty much that just ripped higher again. So what I would like to do on this one, just looking from a weekly view, if you wanted to get more of a recent range, this is probably how I would do it. Let me see. Maybe even this. Yeah, this. So you get this swing low to swing high. Full retracement back down to the 786. That's actually where I started a position on snow in the 150s, all in here for shares. That heavy retracement is great to see because you're coming back down and then boom, you just shoot right back up off this golden pocket. If you were buying any shares in here, you're looking pretty good because they've pretty much almost doubled. So all the way back up, let's add some higher fib targets. Put it on the daily. You can see what I'm talking about. So this is a fairly recent range. February of last year to March. That should tell you February was a big month last year all the way to March. Will that continue again here? I don't know, maybe, because it looks pretty darn strong to me. So full deep retracement to this golden pocket, back up. So this is pretty much how, like, it depends on the stock and how you want to play it. So I'm always looking for long swings more so than intraday movements. You could also take a fib from here to here, but I like to keep a more macro kind of view because I always swing. So let's take a look. This high is being respected. We got a cut under back to the 236, which is resistance off the 114. Now we've been building support around these areas and these levels. Finally, recently, we're back over this high from March of last year and still holding. That's why I continue to be bullish. You could take this and just see what I'm talking about. That looks like a bull flag. If you want to take it a step further, like I said, you could do this. Let's change these colors. So I'm going to get rid of this just to demonstrate this. You could put it here, but I actually think it's better to do it here because this is how I've learned to keep doing it. The wick, you need to see a body. So with a wick, it's not good enough for me because the body of the candle is above this low still. So I'd like to keep that low here, swing high to this swing low. And you can already see, boom, we come up here, rejecting around this 382, back down to the lows, back up, and you'll see it's like a stair step every time on every chart. That's how these are traded, because that's how institutions move. They're always looking to get lows, and then around institutional levels, look what happens. We hit the 618, the first test of the golden pocket from this massive sell-off for over a month. So coin has been selling since they made that high early December all the way till pretty much all of January too, halfway through January, and now finally it looks like it's starting to build higher. So you get this trend line that's also being respected, more confluence at the 618. Now we're trading right below the 50 fib, but look at this confluence. You have the 80 EMA, 21 EMA, and 50 EMA. That's all resting right here on the daily. That is huge support in my opinion. And to take it a step further, if you know harmonics, this is a clear W, which is actually, I'm pretty sure, a shark, because the C point undercuts the A point. You only see that on a shark harmonic. And with a shark harmonic, that means the D point is going to go above the X point. So let's add some extensions. And sure enough, I've done this so much. See, it's that same area. I would not be surprised to see a move somewhere around earnings, if not after, into March, into this higher range to test this 377, pretty much 380 area. What you can see here too is if we do it like this, this creates the B point and also another trend line that probably most might miss. And so after this double bottom off the low fib, you get a breakout past this B point. But pretty much we've just been chopping around the B point. That's what I like to see for higher. We still have yet to break into this golden pocket over here. That's where I think coin is headed next. So I hope that kind of gives more clear of like, Fibs pretty much depends on how you trade. And there's multiple ways to do it. The last thing you want to do is have Fibs for every single little move, and then your chart just starts to get annoying. So it's like once you see a proven range that has been proven, that's a high, that's a low, the low held, that is a solid recent Fib sequence to trade off of, because it's like a 2-month-old range. And you can get your 4-hour levels in that same range. Oh, it popped up my other stuff. Let me just zoom out to show you this actually. So we took those macro levels, right? So that should give you clear guidance on more macro. Let me delete this one. Let me delete this little trend. Here's what I mean. You start to overlay as many confluences as possible, and that's how I like to chart. This trend line has been respected What do you see over here? That's our double bottom. So it's not for any reason. We flipped this resistance into support recently this past month. That's where you get this W. And pretty much this yellow B point. I'm pretty sure that's the B point I have marked. Yep. And we're just chopping around. That's why I think we go higher. And that 380 level is also going to be another confluence of my 886. That's where I would see maybe a bigger retracement, because once you get to the 886, you're going to have to see you will see some selling pressure. So whether that's back down to 344, 312, we don't know. But that is a full harmonic in play. And that's how I like to do fibs. Let me do one more, I guess. See, this one's kind of tricky because on VRT, you have this huge gap down. So you can't take this high to low because we've already broken that range. You might want to just take this high to this low, but for me, that's too recent. So the best case scenario would be this. So we get this low on August all the way to the high. And you don't always need to retest the golden pocket. Sometimes the 0.5 is good enough. I could show you multiple examples of that. Look what happened here. We broke out of this recent high. But these candles show a lot of indecision to me, especially with this pretty much long-legged doji kind of looking thing, or like maybe even a gravestone doji. And we couldn't break this range here. And then we got that DeepSeek news and it completely sold the chart off. But look at where we are on the daily, 200 SMA, double bounce. That's why I was like, I'm putting my chips here. I've had multiple positions on this thing back into the 40s. I've traded it and sold here probably this first time I've sold around 100. So I'm like, man, I probably should have never sold and only keep adding at these levels. But I finally got another entry in shares, started my swing here, and we're up like $15. So you have to kind of level these with confluence. So you have the 200 SMA. That's a good sign. Not only that, but you get a full retracement down to the 50 fib here. Chances are that's a pretty good spot to at least see a decent sized bounce. Because even going back here you didn't know this was the 50 fib, but you can even see, look at resistance, flipped support, and like I said, it's a magnet, so it's not going to be necessarily spot on. But that's what happened here. Now, on Friday, we wicked off of this 382 fib, the next level up, and we're still holding it, and it's now above the 100 SMA. But we also got the reject off the 80 MA right here. Still have yet to break this giant sell candle. But you also have this crazy gap. This gap has to be filled, because there's going to be so many orders sitting up here and positions waiting for that to fill. And you can see, look at all the volume that huge sell volume, but then look at the volume that came after. A lot more volume on this chart than you've seen for some time. This means this is an active ticker. And this is going to be one that's going to keep going up, because once you start to like learn fundamentals and about the company, you can't have AI compute expansion without VRT, because they are the next step in all of this technology for cooling infrastructure and all of that. So that's how I'm trading off of these levels pretty much for VRT. And you could see 125 would be a solid target. And even 120 at first, we wicked into it, but we're holding these levels, holding the 100 SMA. So now if you got in here, you could even be like, okay, say you have like 5 contracts. Maybe you're selling all the way up. That's how you should be, scaling out of positions. And that's how you make more money than holding all your position and selling at once. At least that's how I like to do it. And so with my position, I got 6 months, or I got a few months May contracts. I like our chances of filling this gap before May. And you just got to let PA guide you. So that's how I would do that. I think that's enough examples of how it can be. It's all depends on your strategy, like I said. And you could use those 4-hour charts daily, weekly. But I'm looking for more like big institutional levels. So once I have a chart set, that's how I do it until the ranges have broken. And none of these have showed me on all these examples. I gave you example after example of how it works. But anyways, that's that, guys. I hope that helps. And let me know if you have any questions.